Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 13th of June. I'm Daniel Lam, your host for the podcast. Last night was an event-packed session in the US. The FOMC kept the rates unchanged, but the dot plots moved higher for both 2024 and 2025. Now the median FOMC member now expects to cut only once this year. That's down from 3 times per the March projections, and also pushing back 1 cut to 2025. So there are now 4 cuts compared to the previous 3. Now this FOMC had already incorporated the May CPI figure that also came out last night, which slowed more than expected. Most notably, the super core measure, i.e. the core services ex-shelter, contracted 0.1% month-on-month, the first monthly decline since January 2021, with weaker trends in transportation services, new and used vehicle prices, and further declines in auto insurance and repair prices. Moreover, income growth is a major driver of core services ex-shelter inflation, and forward-looking indicators point to continued deceleration in labor demand and compensation growth. So this really leaves shelter costs as the most likely component to resist these inflationary pressures. Now, Chairman Powell did acknowledge the last 2 softer than expected CPI releases and an improved balance of risk towards achieving the committee's goals. But he reiterated that inflation remains too high and the FOMC needs greater confidence before easing monetary policy. So once again, we see the FOMC's desire to cut rates, but we've all seen this quote-unquote yo-yo in the direction of the US macro data over the last few months. It is still not easy for the Fed to be very firm in what they will be able to do on the rates front. Thus, like what we've been discussing in our previous podcasts, investors may be getting a little bit fatigued reading the Fed's tea leaves, and thus they're sticking to their tried and tested trades. And surprise, surprise, the US mega cap growth stocks went up as a group again overnight. And that's because of this investors' behavior. So we continue to like the opportunities offered by AI, cloud, and semiconductor spaces, and remain overweight US technology and US communication services sectors. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.